Hi everyone, welcome back to our channel. Today we are switching gears and diving into our hot topic in energy markets. What's happening with crude oil lately and where prices are headed? I did the research. Here's a clear breakdown of the latest trends, predictions, and risks. What you should watch out for. Global oil markets are going through a very interesting phase right now. On one hand, supply is growing strongly, especially from OPEC plus and non-OPEC producers. On the other hand, demand's growth is sluggish due to weak economic outlooks and the push towards clean energy. The International Energy Agency (AEA) recently raised its forecast for global oil supply growth, now expecting about 3 million barrels per day growth for 2025 and 2.4 billion in 2026. Meanwhile, demand's growth is projected at only 1,710,000 in 2025. This gap supply growing faster than demands is creating a risk of oversupply and downward pressure on prices. In the US Energy Information Administration (EIA) predicts that Brent crude will average 62 per barrel dollar in Q4 of 2025 with further decline to about 52 per barrels in 2026. Their outlook assumes that inventories will continue rising as productions outpace consumption. Some analysis echo this bearish view. For instance, S&P Global estimates that price will continue sliding in 2025 to 2026 unless demand surprises to the upside. Let's look at what's already happening in the third quarter of 2025. Crude oil prices were relatively stable with Brent trading in a narrow range. Supply increases from OPEC plus and uncertainty in trade flows kept price momentum weak. Refinery margins have risen especially for gasoline and diesel crack spread because supply disruption, geopolitical risk, and tighter intermediate products balances have supported preaching. Meanwhile, some geopolitical developments are influencing sentiments. For example, oil surged 1% recently because of statement that India may stop buying oil from Russia, which could shift supply flows. So, what are the key risks and factors that could change the outlook? Number one, geopolitical events are disruption in the Middle East, sanctions or major oil exporters, Russia, Iran, or closer to strategic shipping lanes like the Strait of Hormuz could tighten supply and push prices higher quickly. Number two, production cuts or discipline by OPEC plus. If OPEC plus resolves cuts, slows its supply increases or imposes new cuts that might help stabilize or raise prices. Number three, demand surprises. If global economics rebound faster than expected, especially as developing nations, demand could catch up and absorb excess supply. Number four, energy transitions and policy changes, accelerated adoption of electric vehicles, regulatory push for renewables, and carbon constraint could be dampen oil demand more than models assume. Number five, cost constraint upstream investment. Low prices can extend periods, may force producers to cut capital expenditures, leading to future supply constraints, which could push prices upward later. So, where right might prices go next? Given current forecast, it realistic to expect Brent crude to drop toward the low $60 in the near terms and possibly dip further toward 50 to 55 territory in 2026 unless demand surprises in geopolitical shocks. Interview US VTI is expected to follow a similar pattern. For trader investor and those in energy industries, here's what to watch. Watch monthly inventory reports, especially from the US and OECD nations. Track announcement from OPEC Plus whether they further unwind, cut, or signal restraint. Monitor development in energy policy, carbon regulation, EV growth, and alternative fuels. Stay alert to geopolitical news in the Middle East, Asia, Russia, Iran, and shipping lanes. Evaluate which oil project may face cut cost or delays due to low price environment. That's the potential supply shock ahead. If you like this breakdown, make sure to hit like, share, and subscribe for more research based update on energy markets and global trends. Thanks.